let's start with the perma crisis. And despite everything that we've been hearing, US exceptionalism, that narrative just keeps on trucking, driven by NVIDIA, driven by AI. Is it sustainable?
I think it's sustainable for as long as we're getting lower interest rates and the market expects AI to kind of revolutionize productivity in the US economy. But I think there will come a moment when that story will simply run out of fizz, because I can't tell you anything new about it, and I don't think you can tell me anything new about it. And therefore, my general feeling is that it hasn't got that much further to run. So I would be pretty cautious at these levels.
What then could go wrong with this narrative? What could lead to a sell-off?
Well, I think there are a couple of things which could lead to a sell-off. One, of course, is that the news on the economy, the news on inflation, well, that's all fine, particularly for the United States. But you still have in the background everything geopolitical going wrong. I mean, the position in Ukraine is worsening by the day. The shortage of support is tangible. You have the fact that, as far as I can see, China and Russia are now moving in an alliance which is much more tight and much more purposeful. And therefore, I think that we're not going to see any good news between the United States and China either. So if you look then at what's happening in China, if you look at the islands, the Taiwanese islands of Xiamen, you can see that China is ratcheting up its pressure on the economic zone surrounding Taiwan by actually pretty well making it a standard practice that it doesn't recognize it around the islands which Taiwan owns or rules off the coast of China. Well, that sort of thing can escalate very quickly. So the geopolitical thing is one thing. The other thing I think which we need to bear in mind is that the US economy is a success story. It appears to be close to achieving lower inflation, at least close to the target, without generating a massive rise in unemployment and the laying off of workers in existing jobs. And if that's the case, then the Fed will reduce interest rates by less, because it won't have to reduce interest rates back to the levels that are in the dot forecast today. So you would see a raising of what is called the famous R asterisk, the kind of equilibrium rate of interest or the rate of return of the total economy when things are going at their best. And if that were to occur, then the market would start to anticipate, well, yeah, things are fine growth-wise. We know all that. But interest rates are not going to be reduced by as much. And I would look to that very much as a possible trigger, but somewhere down the road.